Right now, traditional banks are facing a massive structural disruption because Gen Z is starting to realize they're being scammed. A massive industry report showed that only $1 out of every $8 collected through digital apps ever finds its way back into a traditional financial institution. Why? Because young people are abandoning old-school banking loyalty. In fact, only 14% of Gen Z consumers say they trust traditional banks a lot. Today, I am walking you through the exact 3 money habits that are slowly killing big banks, why they're getting worried about Gen Z, and the 3 concrete steps you can take today to make sure you're making the most out of it too. Let's be honest. Most of us were told by our parents to open a checking account at whatever big, traditional brick-and-mortar bank was down the street from our house. We keep our paycheck there because it feels safe. But here is the massive truth bomb nobody tells you. Big banks are quietly making millions of dollars off your hard-earned cash while paying you absolutely nothing in return. To understand why the old-school banking system is starting to disrupt, you have to look at how we actually handle money now. Older generations used to have one contained relationship with one bank. They got their checking account, their savings account, their credit card, and their mortgage all in the same building. Gen Z doesn't do that anymore. We live what experts call a shadow financial life. We treat our primary bank account like a public transit station. That means money lands there on payday, and within 5 minutes, we transfer it out to 5 different apps optimized for specific functions. Let's look at fact number 1. A major study found that 42% of young consumers switched their primary banking relationships purely because they were dissatisfied with their bank's clunky mobile options. If an app takes too long to load, or makes it hard to split a dinner bill with friends, we instantly open a new account somewhere else. Fact number 2. The risk of younger people switching banks is at an all-time high, even if they claim they are moderately satisfied. Because our financial lives are built entirely around apps, transferring our money to a new provider takes 3 minutes and carries 0 friction. The stakes feel incredibly small to us, but to a traditional bank, losing their deposit base is terrifying. The second habit driving them crazy is the sudden death of the credit card trap. Traditional banks make an astronomical amount of money from people carrying high-interest debt and paying hidden fees. But there is a massive cultural shift happening. Young professionals are actively practicing loud budgeting, which just means vocally and proudly saying, "I'm not spending money on that because I'm prioritizing my future." Instead of opening high-fee credit cards, over half of young shoppers now actively prefer digital-first solutions like buy now, pay later platforms for major purchases. We are refusing to let the banks trap us in 24% interest cycles. But here is where the banks are still winning against you specifically. The lazy cash penalty. Let's look at a real-life numbered example using current banking data. Say you have $10,000 sitting in a traditional checking or savings account. The average interest rate at a legacy brick-and-mortar bank is a very tiny 0.01%. That means you'll earn only $1 in interest every year. $1. That doesn't even buy you a piece of gum. Meanwhile, headline inflation means the real purchasing power of that cash is shrinking every single day. The bank takes your $10,000, invests it, makes a massive profit, and hands you 4 quarters at the end of the year. It's a huge trap. Now let's look at numbered example 2. You decide to stop being loyal to a bank that doesn't care about you. You move that exact same $10,000 into a digital high-yield savings account or a modern online neobank, which frequently offer rates around 4% or higher, backed by the FDIC. With this, you'll now earn $400 in interest each year. Think about that. That is an extra $399 in your pocket by picking the second option. But in reality, you're still doing absolutely nothing differently. You didn't have to work extra hours, you didn't have to take on risky investments in the stock market, and you didn't change your lifestyle. You just changed where your cash sleeps at night. Traditional banks rely on the fact that you are too busy, too tired, or too intimidated to switch. They are betting on your procrastination. Every month you leave your emergency fund or your travel savings sitting in a legacy bank account, you are essentially writing a donation check to a multi-billion-dollar corporation. So, how do we take control of this right now? I promised you this would be actionable, so here is your exact 3-step big sister blueprint to stop letting banks profit off your laziness. Step 1. Do a fee audit tonight. Log into your current bank app and check your statements. If you see a monthly maintenance fee, a minimum balance fee, or a fee to use an out-of-network ATM, close the account. There are far too many incredible, free digital options available to ever pay a bank for the privilege of holding your money. Step 2. Separate your banking relationships. Do not keep your checking account and your long-term savings in the same place. Keep a baseline of 1 month's worth of expenses in your regular checking account for bills. Then, open a dedicated high-yield savings account at an online-only institution for your emergency fund or goals. It takes less than 10 minutes to set up online. Step 3. Automate the sweep. Set up an automatic transfer so that the day after your paycheck hits your checking account, a portion is immediately swept out to your high-earning savings account or your automated investment app. Look, taking control of your finances doesn't mean you have to become a day trader or spend hours studying macroeconomics. It just means refusing to play a game where you lose by default. And this way, with new shifting money mindsets and habits, Gen Z is slowly changing the way we manage our money. There's nothing wrong with traditional methods, but it's important to be aware of the range of alternative options that exist so you can make the most of your hard-earned money, and in many cases, even make more money while you sleep. Gen Z, in their pursuit of a more accessible and financially convenient life, might have actually uncovered some of the best hacks to saving money. All of this, without even noticing. If you're a millennial or of another generation, these hacks might be useful to you too. I'm sure you've got your own tips and tricks that you've been mastering yourself as well. The task for you is if Gen Z's hacks can be smartly combined with your own, so everybody can get the most out of their money. If this video was useful to you, hit the subscribe button and let me know what you want me to cover next. I'm dropping new videos just like this every single week, with zero fluff and just the real math. This is your finance sister. Let's get your money moving. See you in the next one.